Okay, so I'll be sharing with you a free price action strategy. It uses a bit of volume spread analysis. As you can see, I have volumes here. It kind of works on the dollar yen and the euro dollar, and the time frame that we use would be the minute 15 chart. The software I'm using is called Forex Tester. It simulates data or generates random tick data, and we do backtests on it to see how well strategies work even on random markets. How this strategy works is that we need fractals. As you can see, I'm applying fractals. We need volumes, and we need the candlesticks. What we do is that we wait for bars with four colors. Four bars with the same colors in a row. So let's say you have 4 bullish bars or 4 bearish bars. So that's the point where we start looking at the volumes. So either the 4th bar or any bar after the 4th bar, you have to look for the volumes. It has to have a body larger than the previous candle, and the volumes has to be smaller than the previous candle, and then we fade that move, meaning trade against whatever that move was. If it was bullish, we sell it. If it was bearish, we buy it. And the profit taking would be just the previous fractal. Do not take exactly at the support resistance level. Give some space. So as you can see, I'm just placing it a bit above that resistance. Okay, now other than having bars which are larger and smaller volumes, you can also have bars which are smaller body but larger volumes, so it works both ways. Okay, as you can see, I place my take profit. My stop loss would be just a grade above. It's either a grade above or fractal, whichever you prefer. Okay, we took profit on the trade. Now I'll be scrolling the chart and I'll bring you the next trade. Okay, we have another signal over here, but the body is of similar size with the previous candle. We do not care about the range or the wick, we only look at the body. So in this case, we have the same body, so we do not count that. Now for here, we have a larger body, but the volume is smaller than the previous bar, so we can sell here. It's a trade: larger body, smaller volume, sell. Okay, now for the trade, the take profit will be placed at the opposite fractal. So I'll be placing it right over here and add a bit, well, to add for spread and stuff. Okay, so that took profit as well. Okay, we have another signal over here. We have 4 bars in a row, and okay, seems like the 5th bar has a larger body and smaller volume, so we'll be selling against this move. I placed my stop loss at the previous high and trying to be as conservative as possible. The purpose here is to lose less money as possible while trying to gain as much as possible. So we expand our profit but decrease our stop loss. Okay, I got stopped on that one, so let's just move on to the next trade. Okay, this is another trade. As we can see, this 4th bar has a larger body, but he has smaller volume, so we can sell against this move. Okay, stop loss is just a bit above at the grid above, and the take profit would be at the opposing fractal, this one, within the 32 pip candle range. A grade of 10 or a grade of 5. Any fractals beyond that is irrelevant. Okay, you got larger candle body and also larger volume, so we have to wait for the next bar. that would have made money, but well, you have to be strict in our rules. Okay, we have another short candle here, four bearish bars, larger body, smaller volume, so we can buy against this bearish move. Unfortunately, we do not have an opposing fractal within the last like 10 grids, so you'll just aim for a high, or for a fakey high as a take profit. A fakey high. Stop loss is about 1 grid or the closest fractal. Okay, take profit, hit. The key to this strategy is not the edge, but it's more of the risk to reward ratio with a slight edge, because you can win only 51% of times, but if your risk to reward ratio is more than 1:1. Okay, this is another bearish trade. We have more than 4 bullish bars in a row, and this bar has smaller volumes than the pin bar, 2 bars to the left. We ignore the doji in the middle between those two. So it has a larger body, but it has smaller volumes. So I'm selling against this. Stop loss is about 1 grade above. Take profit is at the previous fractal. Apparently the stop loss was too small for this platform, so I have to put it as 6 pips. Okay, take profit. Okay, we have another trade here. We have a larger body than the previous candle, and we have a smaller volume than the previous candle, so we can sell against this move. Take profit would be the previous opposite candle, which is here, and stop loss is just a bit above. I think I pressed stop loss too big. It should only be about 5 pips. Thank you for watching. I hope that this strategy brings you many dollars, many pounds, and if you feel like saying thank you, you can always donate money, or just a simple thank you could also be enough, because I don't really need money actually, because I can teach for free.